Welcome back to Future You. This is our December 1 edition. Holy smokes, it's December 1st. Andy Fulton, where are you at?
I'm right
Welcome,
here.
everybody.
Hey, how was your Thanksgiving?
It was good, still full. Need to get on the exercise train before January 1. That's my goal. How about you?
I probably gained somewhere between 5 and 10 pounds in the last 5 days.
Well, a lot of conversation over the holiday. I'm sure you had as well. Get family together. And the question we always get is what's going on in the mortgage market, right? Andy, when my family members ask me that, I turn to you and say, Andy, what is going on in the mortgage market? What do you got for me today?
I welcome those questions at Thanksgiving dinner as opposed to what do you think about politics and the president? So luckily enough, we were able to avoid all of that. So I was very happy. So mortgage questions, I'm very welcome to get them. Yeah, it's December, right? So this is a slower time of the year when it comes to transactions with homes. Less homes sell or get bought right now. But that doesn't mean there's still not activity. There's actually quite a bit of activity happening right now. And I want to talk specifically to folks that are thinking about buying a house or thinking about selling the house that you're in right now. Why don't we take a look at some data? Okay. So let's talk about existing home sales, right? It's the first thing I'll show you on this chart. This is showing you not new home sales. So this only looks at existing home sales. Over the course of the last 60 years, this is where we are right now. We're at about 4 million home sales is probably going to be where we land in 2025. It's been not too much different really since 2023. This is kind of the range we're in. You might see headlines or hear the news talking about how the housing market's in a slump. Yes, comparatively speaking to post-pandemic, it's in a slump. It's actually very much equivalent to right at the beginning of the pandemic. This is the transaction level we were in for the year. And then really the last time we've been at this lower housing market transaction level was back in 1995. And one thing to keep in mind is there's about 30% more households in the United States today than there was in 1995. So factually speaking, less people are buying homes, less people are selling homes in today's market than really most time periods in the last 30 years. The main reason for that is affordability, right? Well, there's the lock-in effect, and then there's also homeownership affordability. So the lock-in effect is, again, these are existing homes. There is a lot of Americans that have a really good interest rate on their existing mortgage. I think still more than half of the country has a sub 5% mortgage interest rate. When you compare that to where rates are today, it's hard to justify selling out of that type of payment into an interest rate that's point and a half, 2 points higher right now. So those people are what we call locked into their homes, at least in the near term. But then there's a lot of other Americans that, there's life events. There's, people are having children. People are just getting started. They're buying their first time home. They're downsizing. They're moving across the country for a job. There's all the other reasons that causes the housing market to maintain some level of liquidity every single year. Make sense, Andrea?
It actually really does.
Good. So let's keep this conversation going. So let's talk about headwinds. I want to talk about housing affordability in general and what it's going to look like going into 2026. And I think there's a few good things coming into our direction to make home prices a little bit more affordable. What you're looking at here is a chart of the 10-year Treasury note. This is a very common, safe investment in the United States that mortgage interest rates tend to follow the closest. And what I'm going to generally point out here is the path that the 10-year Treasury note has been on really since the beginning of the year. So generally speaking, rates have been coming down for the last 12 months. And they've been coming down by a material amount. I think the 10-year Treasury is down about 3/4 of a point from its high this year. So if you think about that, that means mortgage rates have probably come down that much as well. In fact, mortgage rates have come down even faster than the 10-year Treasury rate. What you're looking at here on these squiggly lines is the spread, the difference between the 10-year Treasury interest rate and what people are locking in on average on 30-year fixed rate mortgages. So if I just take your eyeballs right here, the spread is somewhere around 2.25%, right? So that's the difference. So if the 10-year Treasury is 4%, that would put the average 30-year fixed rate mortgage at 6.25%. You'd add the spread to it. What's really nice, and one of the big headwinds, is if you compare the spread between the 10-year Treasury and mortgage rates today, let's say against 2024 or 2023, which you can see on this chart, it's a lot better, right? 2023, if you look at the same time period, was almost a 3% difference in the 10-year Treasury. So again, the 10-year Treasury is right around 4% right now. If we were in 2023, that would put mortgage rates at 7%. But the spread's not that wide. And so really we're more in the low sixes. So that's been a big headwind. A, the Treasury's moving down, and B, the spread between the Treasury and 30-year fixed mortgage rates is narrowing. It's getting closer to each other, which is a real good indication that the servicing portfolios for mortgages and the interest in buying mortgages on the secondary market, like investors that invest in mortgages, the demand's up. So the last thing I want to talk about is inventory. Inventory has been a really, really important part of the conversation about housing affordability. It's a supply and demand thing, right? The less supply, same demand, higher prices. Well, supply of homes is going up. If you look right here, this is our current supply, where we are in 2025 this week. We are a little bit above 800,000 homes that are currently listed for sale. If you compare that just from the years right after COVID, 2021 to 2024, our supply, just in fact, comparing it to 2024, our supply is up nearly 35% from this time last year. Supply being up, again, is a good thing. If you're thinking about buying a home, it means you have more options. There's more homes to look at in the market. You're not competing with as many people on homes. And if you're thinking about selling a house, you're going to have to be a bit more competitive in your market. You're going to have to be a little bit more sharp at what price you're listing your home at. You got to make sure the home is show ready. You want to make sure you work with agents that can really show your house, show the benefits of it, the real features of it. Location is always a variable here. The better the location of your home, the more you're going to be able to ask for your house. So those things start to really come into play. There are other things that are pushing against homeownership affordability, right? Like what I'm showing you are national indices. National indices won't necessarily represent what's happening in the local markets. Some local markets are more competitive than others. Some have more than others. The other thing is there's other components like homeowners insurance costs have been going up. That'll push against it. But these are the headwinds, right? So if I'm going into 2026 and I'm thinking about selling a house, I want to work with a highly experienced real estate agent that A, knows the right price point for me to go in. And I need to follow my agent's recommendations on that, right? I shouldn't be pricing my house based on feel or ego. I need to follow what is going to sell. The second thing I'd say, if you're thinking about selling your house, is some of this data that we're getting right now is indicating that the buying cycle, right? There's a cycle in the housing market in terms of when people buy. It's starting sooner in the year. Usually it started in late February, March. Now it's in January, late February. So if you're thinking about listing your house, I'd get on it sooner than later. And for buyers, yes, you've got more negotiation right now. And although you may be hearing headlines that homeownership is unaffordable, maybe this isn't the right time to buy, I'd ignore those headlines. I would think about what's important to you, what are your priorities if you're looking to potentially buy, and I'd start looking now because you never know. Interest rates could really drop through the floor, and if they did, it's going to bring a whole bunch of new demand in the market, which could restrict inventory and make home prices go up faster than the savings are currently on interest rates. So timing is really important, and my recommendation is don't wait.
That's awesome. It's funny, before you said it, I was going to say it really goes to show how important it is to find a real estate agent that you trust, because you really need to rely on their expertise and their guidance and not get caught into the I know how much money I spent on that pool and I want to get every penny back for it. You really need to rely on the experts here.
Yeah, we can be our own worst enemies when we're thinking about selling our house, right?
Mhm.
We could be the biggest fan of our house and think it's worth way more than it is. Make sure that you're consulting somebody. You've got an expert that knows how to sell homes, that has a lot of experience in it, that can say, hey, if you list it here, it's going to take forever. If you list it here, you're going to have this home sold in the next 30, 60 days. If you don't know a good real estate agent to work with, we do. We work with them all the time. We know the great ones. We know the ones that are still kind of getting their feet wet. We can make sure we line you up with the right real estate agent in your market. So just email us, help@future.loans. The other thing I wanted to point out is some of these charts that I share on Future You YouTube videos, there's a source to them. And I wanted to give credit to Logan Motoshami. He is the lead economics advisor for Housing Wire. And Housing Wire itself, it's one of the most important, especially if you work in this industry and you really want to get educated. I highly recommend Housing Wire for the content. It's great content that is nonpartisan and really uses facts to understand the market.
That's awesome, Andy. Appreciate this week's update. Always wonderful to hear your insight for sure.
Have a great week, Andrea.
You too. Signing off.